What happens if banks run out of cash? Real-life examples. Imagine waking up tomorrow, walking into your bank, and being told, "Sorry, we're out of cash." No access to your savings, no money for your daily needs, your financial safety net, gone in an instant. Scary, isn't it? But here's the kicker. It's happened before, and it could happen again. Wait, you're probably thinking, but this is America in 2024, not some zombie apocalypse movie. Well, let me ask you this. What would you do if your debit card just stopped working right now? Scary, right? Let's dive into the truth behind bank runs and how you can protect yourself. What are bank runs and why do they happen? To understand what happens when banks run out of cash, we first need to know why this can even happen in the first place. Here's the deal. Banks don't actually keep all your money sitting in a vault. They operate on something called fractional reserve banking. In simple terms, they only hold a fraction of customer deposits as cash. The rest, it's loaned out or invested. Now, here's where things get dicey. If too many people panic and withdraw their money at once, think of it as a financial stampede. The bank can't keep up. This is what we call a bank run. And no, this isn't just a theoretical risk. It's real and has shaken entire economies. But here's the twist. A bank doesn't even need to fail for people to lose everything. I'll explain why in just a moment. Real-life bank runs that changed everything. Let's travel back to 2008. One of the darkest chapters in modern finance. Washington Mutual, or WAMU, was America's largest savings and loan association. Yet, within 10 days of panic withdrawals, $16 billion evaporated, leaving WAMU bankrupt. Customers lined up outside branches, hoping to grab their money before it was too late. And let me tell you, those lines were longer than the ones for Black Friday deals at Walmart. Now, before you think this only happens in recessions, let's fast forward to 2023. Silicon Valley Bank, an institution with billions in assets, collapsed almost overnight. Why? Rising interest rates caused its investments to tank, and customers panicked. Within hours, social media amplified fears, triggering chaos. Here's the scary part. These aren't isolated events. Similar bank runs are happening globally, and one recent example might hit closer to home than you think. In 2019, a bank in Lebanon froze withdrawals amid a financial crisis. Customers were locked out of their life savings for years. Imagine working your whole life, saving diligently, only to be told you can't access a single penny. Could this happen in the US? The answer might surprise you. How you can protect yourself. So, how can you ensure your money is safe, even if your bank faces a crisis? Here are 3 practical steps to shield yourself. 1. Diversify your assets *. Think of it this way. Would you store all your valuables in one room if there was a risk of fire? Diversify your savings. Keep some cash at home, spread funds across multiple banks, and consider investing in assets like gold or cryptocurrency. 2. Understand FDIC insurance *. The good news is, most U.S. banks are FDIC insured. This means your deposits up to $250,000 are protected. But here's a catch. Joint accounts and investment products aren't always covered. Know your bank's limits. 3. Emergency preparedness *. Always have an emergency fund in cash for at least 3 months of expenses. Think of it as a financial parachute. You may never need it, but you'll be glad you have it if you do. These steps are your lifeline. But there's something even more powerful than just preparing for the worst. Here's the bottom line. Financial freedom isn't just about how much you earn. It's about protecting what you have and planning for the future. And remember, fear isn't the enemy, complacency is. Speaking of planning for the future, there's one financial principle that's often overlooked but has the potential to make you a millionaire. It's called the power of compounding, and I've broken it down in another video. Click here to discover how small, consistent actions can lead to massive wealth over time.